Hey, what is going on, guys? Trevor here. Welcome back to another video. Welcome back to the last video in this three-part series of how to invest in the stock market for beginners. Now, if you have not checked out my previous two videos that I made, definitely check out those videos because each video builds off of each other. They're only 3 videos long. I share with you everything that I learned of how to actually invest in the stock market on a basic level, but each video is actually over 20 minutes long. I believe they're over 20 minutes long. I try to make it as informative as I possibly could by cramming it into around a 20-minute video. You know, they're free, they're informative. Definitely recommend you go check them out. And if you have already watched those videos, then I'm excited to share with you the last video of the series, which is going to be what we're going to be going over to today. If you guys found any value in this series that I made here on YouTube, please feel free to share it with a friend, share it with the family. I have a very small channel, so more exposure for my videos is obviously great. I feel like it would be a very, very valuable video series for beginners to watch when it comes to investing in the stock market. So with that being said, guys, thank you so much for taking the time to watch this video series. Here is the layout for the last video of this series. So first thing I want to talk to you guys about here today is how to handle and prepare for volatility. It's going to happen, so I want to make sure that we are prepared. I touched on this in previous videos, but specifically in this course, if this is the first time you're checking out my channel, I want to make sure I address that for you guys. Second, I want to talk about when do you know when to buy or sell a stock. Now, we went over what to look for and all the documents that we should look for in a basic overview, but how do you know if it's a time to buy a stock or if it's a time to sell a stock? I want to touch on that a little bit in today's video. Also, I want to share with you what to do when you make money in the brokerage. Let's say you make some profits in the account, which is obviously the ultimate goal, right? What do you do with that money? Okay, do you take it out? Do you reinvest it? Do you do other things with it? Let's go over that in this video as well today. And lastly, I want to go over my closing thoughts, just how I feel overall wrapping up this entire series. So again, thank you guys so much for taking the time to watch this video. If you get any value from it whatsoever, hit that subscribe button and hit that like button. It really helps out my small channel. I would love to have you part of the community as well that I have here on YouTube. So thank you guys so much, and let's get into it. Okay, the first section of this video is how to prepare and handle volatility. Now I'm going to kind of divide this into 2 parts here, and I made a video on this recently, but I want to touch on this specifically in this video because it's very, very, very important, especially if you're a beginner in the stock market. The first way that I personally prepare for volatility, guys, is to establish an emergency fund. Now, this doesn't really necessarily have anything to do with the actual stock market investing process and the research when it comes to, buying stocks and whatnot. But this is a critical thing that I want you guys to understand is having an emergency fund is very, very important. That way, when we can invest in the stock market, we have money that is in savings. It's an emergency fund. It's just for emergencies. And we also have money on the side that we can decide to invest in. That way, we're not investing money that we may need when we have to take it out of our emergency fund. I generally recommend you establish a 3 to 6 month emergency fund. Now, there's some people that recommend more than that, some people that recommend less than that. I definitely recommend you sit down and you go, okay, how much do I need to save as an emergency fund so that I can have money that is in savings and it's not touched except for only emergencies, and I have money that's, sitting around that I'm able to invest in. I think that distinction is very, very important. You need to establish that before we get going in the stock market. And it's a great way to prepare for volatility because if volatility happens, stocks go down. If we want to add more to our current positions or buy more stocks, you have money to do that and you're not taking it out of a place that you probably shouldn't. Okay, so definitely establish an emergency fund. Next thing I want to tell you is pay off debt. Now, again, this is not something that's necessarily related to the stock market, but this is personally how I was able to scale my portfolio to a massive level. One, I did not make a lot of money at all. I did not make a lot of income, but I had no debt. Okay, so having no debt allowed me to be less liable to other things. Well, what does that mean? Well, if you're in college like me or you're in high school and you don't make a ton of money, let's say you don't make a ton of money, you have a part-time job or something, stay away from debt, in my personal opinion. Stay away from debt. If you're not going to be liable to anything, you have more cash, and the more cash you have, the more you're able to invest. So you don't have to have a ton of money. A lot of people think they need to increase their income immediately to, start to invest more. And while yes, that obviously will help, if you don't have debt that you're trying to pay off as well and you're debt free and you have just maybe a little bit of income, we can start building a portfolio that way as well. I'm living proof of how that works. So definitely recommend that you pay off debt. There's many ways to do this. I've made videos talking about the Dave Ramsey approach when it comes to the debt avalanche and the debt snowball. Both very, very two proven methods to pay off debt pretty quickly, and I definitely recommend get going on that. That'll just put you in a position that if we are in a time of volatility or a stock market crash, you are going to be prepared because you don't owe money to somebody, and you have cash on the sidelines ready to go to invest. So hope that's making sense. Moving on to number 3, keep 10 to 30% in cash or cash equivalents. We talked about this in the last video. Jeremy over at Financial Education has always taught this, and this is something that has been ingrained in my head since we started. So I'm not going to touch too much on this since we talked about it in the last video, but still recommend 10 to 30% in cash or cash equivalents. Number 4, understand what you are investing in. This is very, very critical, guys. We talked about this a little bit. If you're just going to go into the stock market and just randomly buy stocks based on articles you read or friends that you're talking to, and they say that, not only do you not understand anything about the business, but you also don't understand when is a good time to sell. When is a good time to buy more? When is a good time to sell? Because stocks are generally volatile. If we're going to be in the stock market in individual stocks, you can expect volatility. It's not necessarily if you're going to experience volatility, it's when you're going to experience volatility, right? So definitely make sure you understand, what stocks you're investing in. That way, you know that if the stock that you're investing in, does it go along with your strategy that we established at the beginning? Does it go along with your risk tolerance that we established at the beginning as well? I suggest long-term investing in the stock market, individual stocks, but this is definitely something that you need to think of when it comes to investing in the stock market. Moving on to number 5, I would say diversify here. I'm pretty hesitant when I say diversify because people take this term and and then all of a sudden they become overly diversified. What I mean by diversify, guys, is don't have all your money in one stock, right? And you want to hold just a couple different stocks. Now, I've seen people that have $10,000 portfolios and they have 100 stocks. To me, that's just way too many, and I think you should just buy an ETF or an index fund at that point. If you have like $1,000, I think like 1 or 2 stocks is probably just good for you there. But, we want to be in a position where we're building a portfolio with a certain amount of money that we have, and we can build significant amount of equity in individual companies, right? If let's say, go back to that $10,000 example with 100 stocks, well, you're not even building out any significant positions in those stocks, right? So even if the stock goes up 10, 15, 20% within the year, your gains aren't going to be that great because you only have like a very little bit amount of money in those stocks, and we can't even keep track of that many companies as well. So while I say diversify, I don't mean to go buy a bunch of different stocks, okay? I just mean to pick a couple different stocks so you're not all in one stock. I think that's very, very important. Now, how do we handle volatility? So again, volatility is going to come, whether it's going to be in the next couple months, next year, I don't really know. But understand that volatility can be scary. However, a lot of opportunities are created when there is a volatile stock market. I think back to, since I've been investing, 2018 was a very volatile time towards the end of 2018. And there were a lot of undervalued stocks, a lot of deals that emerged from a volatile 2018 or the end of 2018. Recently, March 2020, depending on when you guys are watching this video, a lot of volatility occurred, right? That presented a lot of opportunities within the stock market. Now, sure, not every single stock was at a steal, right? Not every single stock was at a great valuation to buy. Some companies went bankrupt, right? So you have to be very, very careful. But that's where we look into all the things that we need to look into when it comes to investing in the stock market that we talked about in the previous video. So, opportunities come during volatile times for those who are prepared. That's the key difference, guys. If you're not prepared for volatility and you're not in a position to take advantage of these opportunities, then you're not going to have very fun times. It's not going to be a very fun time when you have a volatile stock market. So doing these things that we just listed above can definitely help you prepare for a volatile stock market. The other thing I want to talk about here as far as how do we handle volatility, control your emotions. I talk about this on every video, guys. Do not buy or sell stocks based on emotion. Take a breath, say, hey, am I buying or selling based on emotion, or am I buying or selling based on facts? Facts would be fundamental analysis. We looked into the company. We said, hey, I'm selling this stock because now they took on way too much debt than I originally liked. They changed up the management team. I don't like the fundamentals of the business anymore. An emotional decision would be, the stock price dropped 10% and I'm scared I'm going to lose my money. And, I read an article that said holding XYZ stock is a bad idea, so I'm going to sell. That would be based on an emotional decision and not a factual or, a logical, a decision there to sell. So definitely recommend making those distinctions. I always use the Warren Buffett example of Warren Buffett has been investing in the stock market for a very, very long time, we can say, right? There's probably many reasons that he could have sold stocks throughout the years. And we know he's been very, very successful for a variety of reasons, but he's a long-term stock market investor. That is his strategy, right? He probably could have told you many instances where he could have sold stocks based on fear, based on emotion. And, I think that's just a good example to talk about. Don't get too high. Don't get too low on your investments. Just try and stay right in the middle and make, decisions from a well-balanced perspective. Now, moving on to when do you know if it is a good time to buy or to sell an investment? Okay, we kind of touched on this in the last video. But what I want you guys to understand is it depends on the kind of stock or the portfolio that you're buying or that you're building, right? It depends. There's different times where it might be better to buy a growth stock now than it would be to buy a dividend stock. There's many different indicators when you're looking at different types of sectors within the stock market. So understand that there's no for sure time. There's never a time where it's like once the stock hits this price and this PE ratio, this is the exact time I want you to buy the stock. It's unrealistic, guys. You're not going to be able to pinpoint an exact time. And that's what the risk and that's what the, I call it fun of trying to, find when a stock is a good time to buy. That's part of the fun and part of the chase of investing in individual companies. Also, an all-time low within a stock market. If you look at the stock that you're trying to buy, right, you do all your fundamental analysis, and then you look at the chart, you look at the 52-week high, 52-week low, and it's at an all-time low right now. It does not automatically mean it's a buy, okay? It does not automatically mean it's a buy because why? It can go lower, the stock price can go lower, and it can also go higher. It really just depends, right? So understand that. Now, when it comes to actually labeling these stocks out here, some of the things that I look for, whether it's time to buy the stock here, if I take a look at growth stocks, for example, so one of the things that I like to look for when it comes to growth stocks, and if it's going to be a good addition to my portfolio here, is going to be, is there a lot of opportunity within this stock? Is the stock that I'm about to buy here, is there a lot of opportunity ahead for this market that this stock, this company is going after? If there is, it might be a good time to buy the company, right? That's just one of the things that I look at. I also look at if revenue is increasing by around 10% or so. Also looking at, is this company a dominant player when it comes to the space that they're in? Are they the leader in this market that they are a part of right now? Or are they, kind of behind the competition? Are they neck and neck with the competition? Those are some things that I would definitely consider. And while we take just a couple of these concepts and then we combine them with the last video that I did where we actually look into the balance sheet, we look into all the fundamental analysis things that we want to look into in a company, you combine those together, you're going to have a much better idea if this is a good time to buy this specific stock or not. Now, if we move on to value stocks, basically, guys, just looking at the balance sheet, the income statement, does the stock reflect the current valuation? Does the stock reflect the current share price? If you just look into the fundamentals of this company, is it a good time to buy this company? It'll basically tell you, based on the financial information relevant to the stock price, and looking at the PE ratio, is this an undervalued stock or not? And if it's not, you'll probably see some pretty high red flags when it comes to building an initial position. This is definitely important that you do that kind of analysis. Moving on to like dividend stocks, some examples I can give you guys is what is the dividend history, right? You can look at the dividend history, especially in 2020, the time like we're in right now, depending on when you guys watch this video again. If you're looking to start out investing in 2020 and you're looking to become a dividend investor, look at the dividend history. Is it consistent? Did the pandemic that we had recently, did that affect, how much the company paid out in dividends? Did they slash their dividends by a certain percentage? Did they get rid of the dividends altogether? Definitely things to look at and, consider. Now, just because a company, maybe cut their dividend in the short term here in 2020 does not mean they're not going to ever pay it again. You just want to be concerned, okay, well, they weren't able to continue to pay this dividend throughout 2020. What makes me think that they're going to be able to pay the dividend in the next 5 years or so consistently, okay? So you just want to think ahead like that a little bit, or at least I recommend that you do something like that. Also, I'd make sure that the payout ratio for dividend stocks is under 60%. That's personally just what I've always done whenever I'm looking to buy a dividend stock. I really don't even look at the yield, guys. A lot of people chase the high dividend yield. Highly recommend looking at the dividend payout ratio, making sure it's somewhere under around 60%. That just shows you what portion of the company's profits are actually being paid out in the form of dividends. If it's way too high, then it might not be sustainable. The lower, generally, the better, right? Because that means that the company can probably sustain that dividend payment for a very long time. And as a dividend investor, you definitely want to make sure you're buying a company that has sustained payments from the company. So Last thing here on dividends is, again, growth opportunity. Now, maybe you don't really care about the growth. You just care about the dividend payments from the company. I generally like to look at dividend growth stocks. So I like that payment that I get every single quarter or every single month or whatever the company pays. But I also want to look at the growth potential. Look at the, how's the company growing revenue, and looking and saying, is there expansion opportunity for this company? Because if the company's just sitting like this, over the past 5 years and they still pay a dividend, that's great. But they're not going to continue to pay a dividend if they're not growing, as a company overall. So just some things to keep in mind. I definitely would go through this process when it comes to seeing, hey, is this a good time to buy the stock right now, or a time to sell the stock? Definitely go through that process. Now, moving on to the next section here, which is, what do you do with the money that you make within your brokerage account? This is a great question, and this is a very, very common question that I get all the time, and a question that I asked myself when I first started as well. What I can tell you guys is the quick answer is reinvest it. Generally, for probably 95, I think most of my audience is around 25 to 35 years old. Generally, I'm just going to recommend reinvest it. Just reinvest it. That's probably the answer that's going to be best for you. This really comes down to what you chose to do at the beginning of the series when we were developing your strategy. If your strategy was to grow and build your portfolio to a massive level, it's going to be just reinvesting that money, guys. It's going to be reinvesting that money, and that way we're not taking more money out of our accounts, our bank accounts, whether that's in savings, checking, whatever it is. We don't have to take as much money out anymore. We can start building within the money, the profits that we're making in the portfolio. Whatever I like to do, guys, is I like to say, okay, I break down my income, my expenses every single month, which I highly recommend you guys do. Made a video on this too. But say, okay, I can allocate this amount per month into investing. This is how much I spend per month, and this is how much that I make per month, right? And you're able to figure out how much you can funnel in per month into investments, and then anything that goes into that account, I don't take out. Whether that is in, the account itself, it just stays in there as cash, or I just keep reinvesting that. I think that's very, very important. I'm not exactly sure if that made sense. I don't feel like I explained that very well, but any money that I put into my account, I just think, okay, this is the money that I'm putting in my portfolio, and you got to make sure you're not putting in too much, because you want to make sure you have enough for your expenses and your life and whatnot. But generally, guys, it's just going to be reinvesting it. Comes down to your strategy that you developed at the beginning of this series. Now, if you are, close to retirement, you're close to getting to that level of living off your investments, congratulations, that's awesome. Then maybe you can start living off your investments, and that's for a whole nother video. But generally, guys, I would just reinvest everything that you get, whether that's dividend payments, you sell a stock at a gain, constantly reinvest it. But I do want to make sure you guys understand, it does not mean that when you make profits, it does not mean you automatically have to reinvest it. Like, you sell out of a stock and then immediately the next day you have to go buy something else. You can keep it in there as cash. I just recommend that you keep the cash in there, right? So we can constantly build that portfolio. Now, some closing thoughts here that I want to share with you guys. I'm trying to go as fast as I can so these videos don't, drag on past 20 minutes again. Closing thoughts that I have here to wrap up this series. First thing is, have patience. Okay, this is a long-term game, at least what I'm going to be teaching on this channel and what I've learned over the past couple of years of me investing. The people that do the best typically in the stock market that I've seen are very, very patient, and they are investing in the long term. Now, I'm sure there's exceptions. People make money other ways in the stock market, but just overall as a broad statement, patience is very, very important in the stock market, and that's one of the ways that I've seen a lot of people build a lot of wealth in the stock market. So understand it's a long-term process. And the second thing I want to share with you is enjoy the process. This is meant to be fun, by the way. You're watching this video and you watched all my other videos that were super, super long because you want to learn something and get something out of this, right? Enjoy this process. Understand you're not going to be an expert right away, especially if you're a beginner. And I'm definitely still not an expert, but I'm enjoying learning about new stuff every single day, applying what I've learned, and getting the results that I've actually taken the time to learn about. So I definitely recommend you guys just sit back, enjoy the process. Don't overwhelm yourself and don't, rush everything, but just enjoy learning. You're going to make mistakes as well. That's probably another thing I should have put on here, but you're going to make mistakes as well, and that's just how you learn. And that's something that I've had to teach myself as well. So the next thing here is be a part of a community. be part of a YouTube channel, be part of a Discord group, whatever it is. If it's a course, if it's a Patreon, I don't care what it is. I don't offer any products right now, so this is not a plug to my stuff, but join something. I feel like whether it's just following a YouTube channel, a lot, whether it's following multiple YouTube channels, or getting in a community that's related to what you want to do. If learning how to do the stock market and buy and sell stocks and just understand more about investing overall is something you want to do, get around the finance community on YouTube. There's thousands of creators on here that talk about investing in the stock market and are very, very knowledgeable. That's literally how I learned, as well as taking courses. So I definitely recommend just getting involved, and that'll definitely help you in getting that group. It'll just help you answer questions that you may have, share your experience. It just takes your knowledge to a whole nother level. It's really, really cool. Other than that, guys, thank you so much for taking the time to watch. I hope I answered most of the questions that you guys had out there. Chances are I didn't get to every single question that was sent to me on Instagram. If you guys have any other questions, please let me know in the comments. Please let me know in Instagram. You can send me a DM and send a private message there if you'd like, and I can answer that for you as well on Instagram. Any other video suggestions that you guys have for me, please feel free to send them to me. I'm always open to new video ideas. This video idea series actually came from a subscriber of mine, so I'm very happy I was finally able to put in the time to create this free kind of template for you guys to use when it comes to investing in the stock market. So again, share this with your friends, share this with your family if you got any value from it, and you think that they can get some use out of this video. Definitely takes me a long time to prep this kind of stuff. So again, thank you guys so much for watching. I look forward to seeing you on future videos of mine. And until then, guys, take care.